Hey guys, welcome to my YouTube channel. My name is Advait, and today we're going to be talking about Nifty weekend analysis. So, I'm going to be making one video every week and update video if required as and when market condition changes. And as part of this, I'm going to be introducing a system where we'll use a composite of variables to track through which we will decide the best trade for us to take. And to start off with, we are going to be looking at the news flow. Now, I have separated news flow into domestic news flow and international news flow. And for this expiry between 7th October and 13th October, as far as domestic news flow is concerned, the deposit and loan growth data and forex data was released on 7th October, which was yesterday. And CPI data, retail inflation data, and WPI data, wholesale price index data, and forex for the next week is going to be released on 14th, along with export and import data. As far as international news flow is concerned, the US unemployment data was released yesterday, and the US PPI and US CPI are going to be released on 12th and 13th respectively. And along with the US CPI, the federal budget balance is also going to be released on 13th. Just to give a little brief on these news variables, as far as the deposit and loan growth rate is concerned, a trend that I'm seeing right now is in high inflationary times such as this, people need to tune down their spending. But interestingly enough, the loan growth rate is surpassing the deposit growth rate, which means to state that people are opting to take on more debts instead of reducing their spending, and this can add to future inflationary woes and therefore must be closely tracked. And as far as the forex data is concerned, you might be well aware of the fact that week on week we have been spending a large chunk of our reserves just to not let the rupee depreciate rapidly, and this is something that I'm closely tracking as well. And the recession fears right now are closely tied to inflationary woes and situations of hyperinflation and possible depression. And therefore, the CPI data along with the WPI data is going to be a key data point that we're going to have to track in the coming few days, weeks, and maybe even quarters. And the export and import data, one interesting trend again there I saw was that both export and import is coming down, which means to state that India is facing the brunt of a global economic slowdown given a very weak currency. And this is something that has to be once again closely monitored. And as far as the international news flow is concerned, the US unemployment data came out positive. Both the non farm payroll data and the US unemployment rate data both came out positive. And the US PPI and US CPI is going to cause a decent amount of volatility in SPX 500, and as a spillover of that in emerging markets like India. The federal budget balance last time around stood at negative $220 billion, and therefore the forecast of this time is also negative. And pretty much this is all the news flow that we have to track domestically and internationally for this expiry. And now going on to technical analysis, we're going to be looking at zones and trend lines. As far as zones are concerned, support is at 16,400 and 16,450 levels, and resistance is at 17,500 and 17,600 levels. Let's look at it in the chart. This level is going to act as resistance, and this level is going to act as support. And we have one more level between 17,150 and 17,250, which will act as resistance. And in fact, it has already acted as resistance, as you can see in the SGX chart. It has reversed back from those levels. And as far as trend lines are concerned, blue trend line that you can see on the chart is a monthly resistance trend line. In the month of August, We closed above that trend line, but the very next month we closed below that trend line, and therefore this month it is interesting to watch if we will close above the trend line or below the trend line, which will give a long term trend direction as far as the market is concerned, because quarterly candle or a 3 month candle would have closed above the monthly resistance trend line. So that is something that I'm actively tracking. And coming to shorter time frames, let's go into daily. Taking a little bit of time to load. Okay. In daily, we have broken out of an M pattern, which is a reversal pattern. And in terms of weekly, we are following a channel pattern. More than a channel pattern, I'd say this is a broadening formation that we are strictly following for the last four swings of the markets. And in terms of 1 hour time frame, we have a downtrend channel pattern that we have been following since 14th September. And in terms of 15 minutes, we have an uptrend channel pattern that we have been following. And looking at SJX chart, we have broken out of this trend line and closed below that. Now, this is just based on trend lines and zones. We can also use fixed range volume to decide at which level most number of transactions had happened. And based on that, if you do that for Nifty futures, this level is the level where we reversed back from last time around, and we broke out of that and a gap down opening, and then now we are exactly at that resistance level, and therefore that is also something that we can track closely. And one more Nifty chart that I want to show you is this. The top of that and the top of this, the distance between these two replicated twice here and here, shows that exactly at those levels every swing was reversed. And to confirm that hypothesis exactly this time around, also we reversed back from those levels. In fact, if you go to hourly, you can see it precisely where we reversed back from. And one more interesting pattern that I'm seeing in daily time frame and Nifty is a head and shoulder pattern, as you can see here. So this is something that we have to closely track as well. And now coming to ratios, there are a few ratios that I'm actively tracking for this expiry, which is Nifty divided by dollar. This shows the performance of Nifty against the performance of dollar. And this ratio has been successful in predicting Nifty tops and bottoms this swing around. We can't say whether this will predict every top and every bottom, but this time around, this has been something that has been doing that, and therefore we are tracking this actively. It predicted the top and it predicted the bottom, as you can see all through the swing here, and now it bounced back from this support level and now has made a top and is reversing back as it's facing an RSI resistance trendline rejection. And apart from that, I'm also looking at USD INR into DEXI. This is the performance of rupee against the performance of dollar. And something that's interesting that's happening here is it has broken out of a multi-month support trend line, as you can see here. This means to state that rupee has started underperforming dollar in a multi-month time frame. So this is something that we have to closely track as well. And next thing I'm looking at is SPGSCI and dollar. This is Standard and Poor, Goldman Sachs Commodity Index and dollar. We're comparing the performance of commodity against the performance of currency, and this indicates that SPX 500 is in for further down move. And finally, we're looking at the difference between India loan growth rate minus India deposit growth rate. And as you can see in a monthly time frame, we are at an all-time high RSI, and therefore this is again something that we have to closely track. And that's pretty much it for today's video. Thank you for watching this video. If you found it useful, hit the like button. It is very useful for growing the channel, as many YouTubers have said in the past. And if you want more such content, please consider subscribing to the channel. Thank you.